Good evening, students. I am the accountancy teacher, Rajkumari Nandagopal. I am taking accountancy and business studies and commerce. Now let us talk about the accountancy. What is accountancy? Accountancy is a systematic subject. It's a science, we can say. It starts with bookkeeping. When a business is started, it needs money. Money, how it is utilized, that money is called capital, introduced in the business, and how that money is introduced, and what purpose that money is used. Everything is discussed in this accountancy. Now let us see certain basic terms used in accountancy. First one we can call bookkeeping. What is bookkeeping? Bookkeeping is a recording of the business transaction. What is a recording of business transaction? I told you already, owner invests his money in the business. This is one transaction. Now it's business money. Now the name of the business is called, let us say, ABCN firm. This ABCN firm purchased some machinery, furniture, goods, that is stock, for doing the business, buying and selling or manufacturing and selling. So many activities are there. So all these activities are expressed in monetary terms. So that should be recorded. Unless the monetary value is there, it cannot be recorded. So all the business transactions have monetary value. So bookkeeping is a art of recording the business transaction. Next term, we are going to learn what is accounting. Accounting is the next stage of bookkeeping. That is, after recording the transaction, the concerned related transactions are taken to one account. Like the different accounts are created. This accounts, we can call it posting in the one as a general book, which is called ledger book. From the ledger book, we can see number of accounts. Okay, first starts bookkeeping, that means recording the transaction. After recording the transactions, we are taking each account in different headings, each account under different headings. That's called classifying. At end of each term, maybe after a month or after quarterly, after a month, every month end we are going to close that account. That means summarizing the results and then analyzing. After analyzing at the end of the year, we are interpreting the results, whether the business earned profit or incurred loss, whatever may be the results. Then it will be taken to the view of the investors or the person, those who are concerned. It will be communicated, the results will be communicated to the concerned persons. Next, let us go to the another term, what is called capital. Capital is the owner's money. Once the money is invested in the capital, it is business money. Now the business account is maintained separately, owner's account is maintained separately. When the owner's account is maintained, it is called the capital account. When a business account is maintained, that money we can call it as a cash account or bank account. Okay. So once the money is invested, the owner is separate. This is comes under the business assumption. There are certain basic business assumptions are there. One under the business assumption is going concern assumption. That means a business will go on for a long term. It will not end after 6 months or a year or after 2 years or 3 years, like that. So it's a long term process. It's a going concern assumption. Second thing, separate entity assumption or legal entity assumption. That means, or we can call it as a business entity. That means capital is owner is separate and business is separate. Next one, I told you, bookkeeping, all transactions should have the monetary value. So money measurement assumption. That means all the money invested in the business are assumed to have the monetary value. or those are having the only monetary value should be taken into consideration. And next, periodic assumption. I told you already, after completing a month, every business should, every account should be total and find out what is the balance, like that. Okay, now let us see the capital is a amount invested by the owner in the business. Next, we can see another assumption term which is called drawing. Drawing is a thing which the owner draws from the business for his personal use, because the owner has invested all his money in the business, means he needs money for his personal use. So that